Amid economic uncertainty, the dream of homeownership in 2025 feels more like a financial trap than a milestone. With mortgage rates stubbornly high, unemployment ticking upward, a faltering economy signaling potential recession, and housing prices at unprecedented peaks, prospective buyers should hit pause. This isn't just cautionary advice, it's a stark warning backed by current trends that could leave new homeowners regretting their decision amid rising costs and diminishing stability. First, consider interest rates, which show no signs of meaningful decline. As of August 2025, the average 30-year fixed mortgage rate hovers around 6.63%, down slightly from recent weeks but still elevated compared to historical norms. Experts predict rates will remain above 6.5% throughout the year, with forecasts from J.P. Morgan indicating little relief due to persistent inflation pressures. This higher-for-longer environment means borrowing costs eat into affordability, turning what should be a wealth-building investment into a burdensome debt. For a median-priced home, monthly payments could soar thousands over pre-2020 levels, squeezing budgets already strained by everyday expenses. Compounding this is rising unemployment, a red flag for economic health. The U.S. unemployment rate stood at 4.1% in June 2025, a slight dip from May's 4.2%, but forecasts point to an uptick to 4.2% in August and 4.3% by September. Labor market cracks are widening, with job growth stalling and more Americans dropping out of the workforce. In a job loss scenario, homeowners risk foreclosure if they can't maintain payments, especially with emergency savings depleted from high living costs. This trend erodes consumer confidence, making it riskier to commit to a large purchase like a house when job security feels precarious. The broader economy is faltering, heightening recession risks that could devastate the housing market. J.P. Morgan estimates a 40% probability of a U.S. recession in 2025, driven by subpar growth, trade disruptions from potential tariffs, and lingering inflation. Other analysts warn of vulnerabilities from overextended firms and high energy prices, with recession odds easing slightly but far from eliminated. A downturn would likely trigger falling home values, leaving buyers underwater on mortgages. We've seen this before. Post-2008 scars remind us how quickly equity vanishes in a slump. Finally, housing prices are at all-time highs, defying logic in a sluggish market. The median existing home sales price hit $435,300 in June 2025, up nearly 50% from 5 years ago, even as sales volumes drop. Inventory remains low at 4.7 months supply, but experts foresee only modest 3% price growth amid high rates. Buying now means overpaying for an asset that may not appreciate, especially if a recession cools demand. In 2025, the housing market is a bubble waiting to deflate. Renting offers flexibility without the anchor of high debt in turbulent times. Wait for rates to ease, jobs to stabilize, and prices to correct. Your financial future will thank you.